Tesla is going to $10,000. Since Tesla CEO Elon Musk declared his ownership on Twitter on April 4th, Tesla stock has witnessed a turbulent downhill ride plunging 42%. However, one Tesla bull is not deterred by this development and believes Tesla stock will outdo itself in the next few years. David Lee, a Tesla bull, is known to be a Tesla fan, and he recently made a post claiming that he was able to increase his initial Tesla stock capital by 100 times its original value. He claimed that when he first purchased Tesla stock, he expected the market value to grow tenfold from $3 billion to $40 billion. He has now stated that the history may repeat itself. In this video, we take a look at what statistics are backing this belief and look at analyst consensus. Stay tuned to find out. Many investors may be wondering if Musk has taken his eye off the ball with one of his most profitable firms as the drama between Musk and Twitter becomes more complicated. Tesla has grown into a powerhouse despite the stock-based distractions. Investors were excited after the company announced a strong first quarter and established lofty long-term goals. However, one question has haunted Tesla for years and is still being asked. Is Tesla's valuation too high for what it does? Growth stock valuations have been put to the test recently as a result of historically high inflation, rising interest rates, and the economic consequences of Russia's invasion of Ukraine. The Nasdaq Composite has dropped 28 a year to date, while the SIBO Volatility Index, sometimes known as Wall Street's fear gauge, has risen over 80% in the same time frame, indicating investors' concern. At the moment, Tesla, as one of the Wall Street's most divisive stocks, has now joined the sell-off, losing 41% of its value since the beginning of the year. Tesla remains the largest and most advanced electric vehicle maker. Tesla has a 75% market share in electric vehicles according to the industry site Cox Automotive, and sold more premium automobiles in the fourth quarter in the United States than Audi, BMW, Lexus, and Mercedes-Benz combined. If you had put $10,000 into Tesla 10 years ago, your investment would now see an annual return of more than 70% on average. During that time, $10,000 invested in the S&P 500 grew just by 2%. That's only a 14% annual compounding rate. We're talking about a near 13,800% gain in value for those investors, which means a $10,000 investment 12 years ago would be worth $1.39 million today. Tesla's meteoric rise is nearly impossible to comprehend, so we definitely understand why some may be skeptical towards the brand. In 2021, it supplied about 1 million electric vehicles, and in the first quarter of this year, it delivered another 310,000, a 67% increase over the previous year. This put Tesla on track to meet Musk's target of 20 million Teslas delivered by 2030. According to one expert, people are misinterpreting Tesla in the same way they misconstrued the initial iPhone. He feels Tesla is only getting started in terms of embracing complexity through innovation. As mentioned earlier, he was taken aback by the fact that the Tesla stock has grown 100 times in just over 8 years by simply holding common stock. In another 8 years, he predicts the stock will go even higher, even 100 times higher. Tesla is still the most valued stock in the auto industry. It is worth more than twice as much as the next largest car maker Toyota, which is valued at about $226 billion. Right now, it's also worth more than the combined value of Ford, GM, Stellantis, and Honda. The EV leader's market value surpassed $1 trillion in late 2021, but the stock has since retreated with the market capitalizations of about $738 billion today. Will Elon Musk's company, which was valued at $1 trillion, return to that level? And if so, when? Sales growth, however, continues to accelerate. In addition, it has become profitable and earnings growth rates are increasing. While macro headwinds and Musk's dramatic prospective purchase of Twitter haven't helped Tesla, the electric car maker's business continued to grow at a rapid pace. A lot of it has to do with the Model 3 and Model Y, which are mass-market sedans and electric crossover vehicles respectively. It has now started exporting the Model Y from its gigafactory in Texas, where it is incorporating its own 4680 battery cell, which is expected to be a significant advance. Given the auto industry's ongoing supply chain issue, there's a reason to assume that Tesla will continue to lead the industry for years to come, and that its stocks, despite its CEO crazed personality, will remain a terrific investment for just as long. Too many people, according to Lee, rely on their knowledge of the earnings report to determine how their company performed in comparisons to analyst forecasts for EPS, revenue margin, and other indicators. The difficulty with this method, he added, is that analysts do not own the bulk of regular stock shares. Some analysts work for companies in which they have no stock ownership. It makes no difference to these analysts whether the company's earnings disappoint or amaze them. For young, high-growth enterprises, investors and analysts' expectations are usually in conflict. This is true because Tesla has been consistently outperforming analyst predictions for quite some time. While the stock price was going down, the company's fortunes were improving despite a closure in its Shanghai facility, supply chain challenges, and increased material costs. Tesla announced on April 2nd that first quarter deliveries were up to marginally at 310,000 and productions was at 305,000. In terms of car productions, Tesla has recently received a deluge of positive press. Quarter 1 output increased by 69% year-over-year, resulting in an 87% increase in automobile revenue. Tesla is getting better margins on every vehicle it makes because revenue climbed faster than production. This boost in margin is due in part to price increases implemented throughout 2021, as well as improvements in production's efficiency for its higher price Model S and X vehicles. It announced $18.8 billion in revenue for the first quarter of 2022 on April 20th, up 81% from the same period last year. This topped analyst projections of $17.8 billion, giving the stock a short-term boost. In addition, its $5.4 billion production factory in Berlin, which has supposed to serve Europe, was ultimately launched. A stock split is also in the works, which should make the stock more enticing to individual investors. Tesla is on the verge of breaking into the premium automobile market. As a result, it should be valued at 35 times earnings rather than 6 times earnings like General Motors or 8.6 times earnings like Toyota. While Tesla is still valued at 90 times earnings, if it continues to grow, it may reach that level. Management also shared some exciting news with investors. It aims to increase car deliveries by 50% yearly over the next several years. Using these predictions to model revenue growth while maintaining Tesla's 17.7% profit margin, the company could make $14.9 billion by 2022. This means Tesla is valued at 49.5 times full-year 2022 earnings, which isn't bad for a firm that intends to expand at a rate of approximately 50% each year. So what are the key drivers of Tesla stock? The fact that Tesla is continually innovating and is led by an entrepreneurial maverick in Elon Musk is the most evident element fueling Tesla's stock prices. In the next few years, the corporations may potentially gain from any increase in fuel prices or government regulations or traditional internal combustion engine automobiles. There is, however, a significant price difference between the highest and lowest price objectives of analysts. The most bullish analysts anticipate the stock will achieve $1,580 in a year. Meanwhile, the lowest price target was only $250. While investor algorithmic forecasting is more optimistic about the company's prospects, the stock is a very good long-term investment according to the report, and the price might grow to $1,217 in the next year. At the same time, the Tesla stock price might reach $2,846 in 5 years. According to the company's 5-year predictions, electric vehicles are gaining market penetrations and Tesla is at the forefront. If you're looking to invest in Tesla stock for the long term, that is 3 to 5 years, the company is currently a terrific investment. However, we're not sure when the bear market will end and the stock could fall even more in the short run, but Dave Lee has stated multiple times that he is in it for the long haul when it comes to this stock, and we think you should take this approach as well. Investors can also limit risk by gradually introducing themselves to the stock over a predetermined length of time, potentially resulting in a cheaper purchase price. Despite the recent drop, the company's market value is nearly equal to the aggregate market capitalizations of the world's 6 major automakers by car sales, leading many to believe that once the stock overcomes certain hurdles, the only way is up for Tesla stock. But what's your personal target price for Tesla? Let us know in the comments below. That's all for today's video. Hope you enjoyed today's video and thank you for watching.